Market hours, Sajid had an interaction with the SEBI chief exclusively saying that don't club futures and options together. That's his sharp correction. He adds that the real concern is hyperactive, short-dated expiry options, and it's not like the regulator or the finance ministry is clamping down specifically on F&O trade.
There is a thought process that there should be minimum eligibility for investors coming into futures and options market, because SEBI's surveys have also said the same thing, that 92% people lose money in F&O, especially retail investors. What is your thought process on this?
So first of all, I will like to correct your question, if I am allowed to.
Yes, please, sir.
This F&O, saying in F&O, it is becoming a very big deal in media. But F is different and O is different. So how is it? It's like saying REITs and InvITs. Now REITs are different, InvITs are different. They may be together as something, but they are quite different. Here is a premium product. Here is a right to recall, right to buy, right to sing. The future is different. The delta works very differently there. So if we have to really take this properly, debate proper, we must also, like surgeon's knife, we should really pinpoint where the problem is.
Segregate both of them separately and look at it.
And separately. And there also on O, you should say that what's wrong with monthly option, what's wrong with options which are long dated. So eventually you will come down to the short dated option, the expiry day problems and the hyperactivity, the premiums are low. Then it becomes like a punting habit.
Exactly.
So let's talk about that. Because the moment you talk on F&O, you are really brushing aside a market which is so very important for us. For price discovery, for doing all this.
Liquidity. Everything.
For liquidity. So therefore, I think we, consciously I would encourage you to, be more focused and clear so that the people don't get an impression that it's all, problematic area.
So we don't want to brush it with this, in one go, but what about the eligibility requirement of people who are indulging either in the O part or the futures part, which is?
So I would say on the O part, where you have the short dated option issue, that we have recognized it as a problem, and therefore the fact that we went in, proactively worked out cumulatively losses, and then projected it, put forward in a public domain, actually that did a lot of investor awareness actually. Because individually they must be thinking that it's a big deal, okay, even if I lose, I don't know, but about others? Because this information is not shared. When we put the whole data put together, this awareness got created. Well, some of the myths that the people were being taught by the wrong influencers got busted. So that also led to a statutory warning that when you start trading, then you do a pop-up. So it's like, when, you are not banning cigarettes, you are banning cigarettes at some places, right? And then you say, okay, it's only banned for for non-adults, you're not allowing them.
For public places.
Okay, for adults, you say public places, and then you say, still I will have a statutory warning, and I will just warn you, right? So therefore your regulation around an activity can have a range of options how you want to regulate it.
That